The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone around the world. How's everyone is doing this Friday afternoon? My name is Eric Morera, and we're going to start today's June the 2nd, and we're going to start in a few minutes in another seminar, a free seminar from Elliott Wave forecast that we're going to be covering what is next for the metals, right? Gold, silver, uh, copper, all the metals around the world that if they're gonna sell, they're gonna rally. So we're gonna do a presentation. It's gonna take about a month, about an hour, and we're gonna give it a few more minutes, around 2 more minutes to start waiting for all the registered traders to be in the session. So good afternoon, and thanks all one more time from participate in these seminars that we do from time to time to the followers around the world. And members also participate, but they see the view and the daily seminars that we do. But this one is for the general public, and thank you all for being here. So good afternoon, Lava, Helen, Robert, Peter, all you guys there. So how's everyone is doing? So how's everyone is doing? Fantastic. Morning, Can team, all you guys there. Carol, everyone there. Yeah, we're gonna start. It's 106. We're gonna start at 107 sharp. I think that's 7 minutes past the hour. Enough time. Marco, good morning, everyone. Good afternoon. That's enough time for everyone to be here after 1 p.m. Anyway, the recording is gonna be available and loaded in our social media and YouTube and the homepage of the site and everywhere. We're gonna start in 30 seconds. Good afternoon, Kyle, everyone. Yeah, very interesting market. Good afternoon, Benahia, everyone. I'm sorry I mispronounced your name, so it's hard. Okay, guys, so here we go again. Another free seminar from EWF within a very interesting market. The seminar, the main goal of the seminar is that you guys are able to understand where we stand with the market, which is a very difficult market. In many ways, it's a market that did corrections, and now it's in what we call the twilight area, right? Are we going in for new highs? Are we going into a wave 3 in the metals, in the indices? Or the market is going to remain sideways between the highs of 2022 or 2020 in the case some of the metals and the lows of 2023 or 22. So it's a very interesting market. Honestly, that like most retail traders, by default, they only follow the smaller time frames and they keep chasing the instruments in the 1 hour, wherever the 1 hour go. They overreact, like they saw gold selling over the last 3 weeks. They want to sell it now, but then when gold was running, they want to buy it on the tick. That's a typical behavior of a retail trader. So we're gonna give you guys a professional look about the group, and we're gonna explain to you guys our reasons. So eventually, we're gonna get into the fascinating world of the metals. Like I say, check correlation and give you guys an idea if they already have a bottom and they're gonna start a new cycle, like I say, or they're gonna do a double from the peak. What we're gonna cover is a little bit of Elliott Wave cycles degrees, so you guys understand it. The Elliott Wave structures, so you guys understand what we're talking about it, because I don't know how deep into the Elliott Wave theory you guys are. Maybe you don't have a big knowledge about the theory and how to relate them. We're going to talk about the grand super cycle, which is the one in our profession matters the most. I know that most of you guys don't trade and hold a trade for 10, 12, 100 years, honestly. Most of you guys trade the most daily or weekly swings, but you need to know where you stand. We're going to provide an indication on how the metals look through the ETF. We're going to take a look at the US dollar structure, because at the end of the day, most traders behave this way. And you guys tell me if I'm right or wrong, all right? You trade in gold and you only look at gold, right? Don't you guys agree? But you guys need to understand that when you trade in gold, you need to know what the dollar is doing, right? Because gold is trading against the US dollar. Gold is not trading against the pound. Gold is trading against the US dollar. So it's important to know when what gold is doing if you're going to be trading gold, right? So what the dollar is doing, my bad. We're going to talk a little bit about gold to silver ratio. And we're going to check also how the GDS, which is an ETF of gold, the ETF of gold is related to the indices, and then we're gonna provide the future path of the group, right? Then we're gonna provide the future path of the group. So that's what we're trying to achieve. Honestly, that's what we're trying to achieve in the seminar, and our goal would be that when we finish the seminar, you guys are capable to have a better idea about where we're heading with the metals. All right, so this is what we call in Elliott Wave the cycles degrees, right? This is and let me explain this before. We're gonna give you guys opportunity after we finish each topic to ask questions, Shelby, and because otherwise, if there is hundreds and hundreds of people here, that if I start answering every question, I will get a little bit disconnect of the main idea. No, it's all right. I always look at gold as an investment. I don't know if it's a currency or anything. As an investment, always good to own gold, in my view. So these are the Elliott Wave cycle degrees. Like I say, it's important to know where you stand. Most of the traders, they put attention to these little degrees, to the minor, mu, to these little degrees, right? But the thing is that if you don't know where you stand over here, you lost over here. These are the yearly century grand super cycle. These are right here the monthly, the dailies and weekly. These are the 4 hours in the middle, and these are the 1 hour. Most traders pay attention to this. Most traders don't look at this, and that's a mistake in our opinion. We're going to be covering in the seminar the degrees and where do we think that we are in the metals. I want to point out to you guys how an Elliott Wave structure looks like and an impulse. No corrections. Today we're going to talk about impulse. What is an impulse? It's a move in which one side is completely winning, and it comes with 5 waves. You got 1, 2, 3, 4, and 5. And that impulse, wave 4, in a regular impulse, wave 4 cannot overlap wave 1. Wave 2 cannot pass below the beginning of wave 1. and wave 3 cannot be the shortest. Wave 3 doesn't have to be the longer, but it cannot be the shortest. And there is something that is called a leading diagonal, in which case the wave 4 overlap wave 1 and it's still an impulse. But I'm talking about an impulse because it's no questions. The metals, they're always bullish in the grand super cycle. They're always bullish. And that maybe shortly answer your question. The metals are always bullish, always are bullish, always bullish in a way that I will never recommend selling the metals because when I'm selling metals, I'm buying the dollar. So technically, but I've been a trader all my life. That I always tell our members since 2009 that we started this way, Elliott Wave forecast. I always tell members, you always buy the dips in the metals and you always buy the dips in the indices. Don't worry about bear market or don't worry about when gold is selling. Every time that you see the index is selling, it's an opportunity to buy. Every time that you see the commodities, the metals selling, it's an opportunity to buy. Because simple things that people don't get, most people don't get it. Saying humankind, gold always has value, always being a tradable commodity. Saying humankind, gold always, the value of gold always go in an outtrend. Saying humankind, then the indices develop and were created, the stock market always go higher. Of course, I don't say that there won't be correction like it happens in 2009. I don't say that there won't be correction in commodities that happened between 2011 and 2014. There always going to be corrections, but there are corrections to the main trend. So I want you guys to understand one thing, that the commodities always are in the bullish sequence, always are bullish, and the trend is bullish. And I don't never been a trader that I like to sell indices, neither to sell commodities, right? If you have to take an intra trade because of various sequence, that's one thing, an intraday trade. But the main trend is impulses to the outside in the indices and in commodities. And something that you never want to be as a trader is to be a picker. Oh my gosh, gold has rallied. Look, it's at 2100. Let me sell it. Because, I mean, like many traders and services around the world, they've been forecasting the peak in the stock market forever. They've been forecasting that forever. And all that the S&P has done is going from 66 in 2009 all the way to 4,000, almost 5,000. And guess what? It's going to continue to go higher and higher and higher. There will be corrections then in between. So it's very important for you guys to understand that the commodities in the grand super cycles, they are very bullish. And it's very important to understand that they are doing either an impulse, flat out impulse, or they are doing right there what we call a nest. And a nest is nothing more than a series of 1, 2, 1, 2 that is reflected over here. Like I said previously, this is in the Elliott Wave theory. In the Elliott Wave theory, or an impulse is 1, 2, 3, 4, 5. Sometimes wave 1 is the standard. Sometimes wave 3 is the standard. Sometimes wave 5 is the standard. This chart right here is a representation of a nest and an extension of wave 3. What is a nest? 1, 2, 1, 2, 1, 2. And then the market, it will extend. How extended? You see 3, 4, 3, 4, 3, 4, right? So that can be seen, that can be seen in many ETF of gold and silver at this moment. But I hope you guys, any question about what is an impulse, any question about what is what is an impulse, any question about what is a nest. Everyone understand what is each one, right? Everyone understand that. How a nest looks like and how an impulse looks like, right? So eventually, an impulse is what we were showing here. 5 waves. 1, 2, 3, 4, 5. A nest is here. 1, 2, 1, 2, 1, 2. And then boom, the market explodes to the right side. So it's important to know that. So these are questions that we're going to be answering during the seminar. And at the end of the seminar, we're going to be able here to tell you guys what is the future path at the end of the seminar, right? So let's hit the charts right now. Let's hit the charts right here. And I want to start with gold, right? So this is gold within the grand super cycle, right? I'm going to remove the labels, and I'm going to put the quarterly charts of gold. Each bar right here is a quarter. So what is the trend? The trend is, like I said previously, guys, to the outside. No reason to sell gold. Now, in your eyes, and I'm going to be interacting with you guys and asking you guys some questions. You guys see that this is the grand super cycle, and you guys are capable to see that there is a cycle that started here, ended here, no labels, put back to 2014, and already makes new highs. Yes or no? You guys are able to see that, right? You guys are able to see that, right? That's very clear right there. It's very clear to see that the market it has a cycle from the all-time lows all the way to 2011. That the market correct, end the correction in 2014 or 15, and already makes a new low, a new high. In our system, this is what we call a bullet sequence. What is a bullet sequence? Because if you translate yourself to an impulse, to the outside, so technically you are at this moment right here. You are in the chart, you are right here. Why? Because first, you haven't even reached the proposed target in gold, that if you look at it from 0 and you do the measuring here, gold should be looking for an area around 29.20 in the foreseeable future. Gold should be looking for 29.20, right? That's when gold should be looking for. So gold should be looking for that area, 29. Gold should be looking for 29.20. So gold looking for that area is telling me that it will be supported. It's telling me that it will be supported. And then we look at the chart and we see that there is right here momentum divergence. For us, this is called a bullet sequence. So the first thing that we need to know is that within the grand super cycle, gold is going to be looking for 3,000, even 4,000 in the next few years. And the idea that there is divergence is telling me that the 2015 low is a significant low. So everyone understand that concept. There is divergence. That divergence is what we call a positive divergence. Why? Because this is a cycle and this is a new, that we call it a new ball game. So technically, gold is have to erase that divergence, and sometimes next year it will accelerate in looking for these areas. Now, last year, gold provided a very good opportunity. What happened last year? Gold, like I say, it peaked over here in 2020 and reached our buying areas around 1671. Right there, we were telling members, buy gold, buy gold, buy gold. Why? It reached the blue box area. What is the blue box area? The blue box area, that area, I don't know if you guys are familiar with this concept. There is high frequency trading, computers trading in the market nowadays. And these areas we have created in Elliott Wave forecast, and we presented to the members when the market does either, like in the case of gold, WXY. In other words, 1, 2, 3, 4, 5, 6, 7 swing. When there is an ABC or a WXY double correction, we always present the buying area, which is the area. Same thing, gold has trade higher in a very nice way. Gold has trade higher, very nice, reacted from the area. And this is the chart, for example, this is the chart here when gold was trading at within, this is the chart when gold was trading into the box, like we call it, when gold was trading into the box, and how we presented to members, right? That was gold back in September of 2017. Very nice setup, and now gold has reacted. So gold, based on the reaction, we believe that it's gonna go higher into new highs. From the lows, there is technically now, you can make it 5 ways, but like I say earlier, gold is trading against the US dollar. Gold is part of the market. Gold is not an insulated instrument or commodity that you trade yourself. It's part of the market. I can lay this 1, 2, 3, 4 in blue, and the new high will be 5. Possible, yes. Then gold, it will do a pullback and correct that cycle before gold goes for new highs again. But gold is very bullish, in my view, and very nice reaction from the blue box. Then we have silver. In 2014, 2020, it gave us the blue box buying. In 2000, last year here, silver gave us also another blue box buying right there, if you guys see it right there. Very technical, but in this case, it did what we call a flat, 3, 3, and 5. So far, silver is most better 3 ways from the lows. Silver, it will extend higher very soon, either to finish one in black here or into a nest, but it's supported. And one thing that is very important about gold, because everybody believes that Elliott Wave is the supreme technique to trade in the market. The supreme technique to trade in the market. No, Elliott Wave, in our view, is a language. In our view, is a language which, in our view, is a language which the market, that you have to use it as a tool to communicate to members what you're thinking. But for me, it's very simple. It's more important to know when to buy here, than putting labels on it. Now, what I was saying about silver and Elliott Wave is the following. We get back to gold right here, and some of you guys looking at gold in the monthly cycle or the quarter cycle, like I said earlier, if you want to be bearish gold, you say gold is doing a flat, right? Gold is doing a flat, and gold is going to put back this way. And a huge selling in gold will happen. Believe me, don't be surprised that if you type gold Elliott Wave in Google or in YouTube, you're gonna find a right there. You're gonna find right there a any Elliott Wave guide, any Elliott Wave guide thinking that way, right? You can find that any Elliott Wave guide thinking that way, right? Now, the reality is that gold can do that in an Elliott Wave count, but the reality is that silver, if you put the monthly that this is silver, right? This is silver. If you put gold and silver together there, what you're gonna get? You're gonna get that gold and silver, they trade kind of identical. And yes, some people that look at gold only can say that it can be a flat and that is gonna rally. But the thing is that silver, this is zero. That's a zero line. And the production cost in silver is around these levels. I don't see silver doing another cycle similar like this because silver won't go below zero, right? So that take away the flat or the bearish view in gold because the combination on the metals, the combination of gold doing a flat with divergency and silver don't having room to the downside, you have to push the outside. Does everyone understand that concept? Everyone understand that concept? Does everyone understand that concept? Very clear, right? Okay, fantastic. So, I mean, explain it one more time is, you have, in the case of gold, a channel here, a connector or correction, a new high, right? And that new high right there comes with divergency. Yeah, it can be a flat. What is a flat? A flat is something, in the Elliott Wave theory, a flat is something like this, as an example. This is a flat, 3, 3, and a 5, right? 3, 3, and 5. Yeah, you can justify that gold can do that. No question asked. There is enough room in this area to take the decline. But that room doesn't exist in silver. So we believe, looking at the lack of room in silver and the high with divergence in gold, we believe that we are in front of the real deal. We believe that we are in front of the real deal, which is the outtrend in gold and silver, right? So silver right here, like I say, it provides, like gold, a very good opportunity. And in our light trading room, we are long silver, I believe, from this area still. And it provides a very good opportunity. And it has either Ines, it has right there, either it's going to trade in a nest or it's going to do 3, 4, and 5. But they're bullish, and I don't see too much downside. Too much downside, I don't see it. Now, this is copper right here, and copper right now is within one string area over here. Copper right now is within one string area. So copper is within a one string area. It also bounced after 3 weeks at the same time as the other, which is July 2022. Silver bottom on August 2022. And gold low was here created on around the same time, September, I believe, or August 2022. September. So, so eventually, copper, it did the same. It reacted, now it's correcting and expecting higher. Now, the copper has room to go here, yes, right? But at the end, I want you guys to understand that the grand super cycle and all these commodities are very bullish. And that selling is not supporting. You look at copper, 1, 2, 3, 4, 5, a pullback in 3, and guess what? Like gold, a high with momentum divergency. So, conclusion out of these 3 metals, that gold and copper has taken already the peak of 2011. Both of them has taken the peak of 2011. The silver is lagging on the peak of 2011. Silver hasn't taken it, but there is a reason for it. And the reason is called the gold to silver ratio. What is the gold to silver ratio? The gold to silver ratio is a ratio that it trades based on who around who, gold and silver, the relationship between them. When the gold to silver ratio trade to the outside, what happened? Gold is stronger than silver. When the gold to silver ratio trade to the downside, what happened? Silver is stronger than gold. So if we take these labels off a little bit right here for a second, and we put the grand super cycle of gold and silver, the gold to silver ratio here, what happened? What happened in 2000 here? In 2022, or 2020, my bad. What happened? This is 0 right here, and this is your connector right here. The gold to silver ratio reached the blue box area over here. So what the gold to silver ratio is telling me is one thing, and this is a very deep analysis. Ronald, Manos, Mark, Said, Marcos, all you guys there. This is very deep analysis. This is not an analysis that is based in chasing just the 1 hour Elliott Wave count. This comes from the grand super cycle. So the gold to silver ratio reached the equalex here, which is telling me that that's the main reason why silver hasn't break 2011 and gold did. And that's telling me that for the foreseeable future, silver is gonna be a better trade, a better trade than gold. That silver is gonna be a better trade than gold. At one moment, silver is a gold to silver ratio is gonna trade here, and you're going to see when I put the 3 then together, this is gold and the ratio, very similar, and you see silver and the ratio here, and you see how silver is lacking tremendously. Look, gold already to the highest like the ratio did. Silver is lagging. Now, in this correction that is coming to correct this cycle, silver is going to catch up, and gold is going to trade higher, just that silver is going to run gold, right? So another interesting instrument, or symbol in this case, is the GDS. What is GDS? It's the ETF for gold, right? Also provide a blue badge area to our members last year. An ETF is an ETF which related to gold, but also relate to the indices. This low right here is 926. if you put the S&P on top of the ETF right there, you're gonna see how the S&P right here relate to ETF. You see, yeah, silver is gonna be stronger than gold. That's what the ratio is saying. So doesn't mean today, and mean in the long run. So if you look at it, the decline in the GDS right here agree with the decline in the S&P. And the S&P went higher and GDS went higher. And then right here kind of trade in this decline. So your ABC in the GDS is right here at the S&P correction. Now on the overall run, you're gonna see how they trend together. So what I'm telling you this is because I always look at the ETF related to the indices. And then when I go to the indices, I have to look, for example, at an instrument like FTSE from UK. What is telling me, and you're gonna ask yourself, how this guy is relating FTSE and index from UK to gold. Because guys, index is higher in the overall market means dollar lower. Dollar lower in the overall market means gold higher. And index is higher means ETF higher. It's the overall trend what I'm talking about it. So if you look over here, you're gonna see that if I overlay here, for example, if I overlay here gold to this equation, guess what? This is what you're gonna get. You're gonna see what is the trend in both? It's higher, right? The trend is higher. So that means that the index is going to remain supported. And if the index is going to remain supported, soon the dollar is going to sell. I'm not talking about next week. I'm talking about the overall trend. So this index is very particular. Why? Because this index has an overlapping area right here. So this one is nesting. 1, 2, 1, 2, and now is in another 1, 2. But there's gonna be a moment that it's gonna explode higher. So the index support is a bullet sequence. What support? GDS. GDS support will be supported because the index support GDS, right? Technically, you're gonna see how this one, the lows, they are agreements. The low here, the secondary low here, another low here, and another low here. Don't you guys see it? Marcos, Roman, Manos, all you guys mark how the lows of the GDS right here, right here, right here, and right here agree with the low on the indices. You guys see the relationship, right? It's clear right there. So the indices are telling me one market. Hey, how do you know that phrase? You used to be a member, right, Edgar? So this is as clear as the TNC waters, like I always say. So eventually, this is what we call the one market only. Everything relates. Then we go to the US dollar and say, okay, does the dollar support the very bullish view in the indices or no? And what do you have since 2008 in the dollar? 1 in red, 2 in red, 3, 4, and 5. The dollar might have one more push. How you doing, Greg? How you doing, my friend? The dollar, long time no see you. The dollar will support one more high here. But the dollar is, the peak in the dollar might be in place here. And the dollar peak, you're gonna see that I agree if I add the dollar to this chart, the dollar peak will agree with the gold to silver ratio. Let me take gold, let me take silver, and you're gonna see how the dollar rallied from 2008 and the ratio rallied. And you see the peak, the peak, the peak. So the dollar having 5 weeks from the lows already 1, 2, 3, 4, 5 is telling me, be careful buying the US dollar. I really do see this as clear as it gets. Another example is ExxonMobil, which when you're trading ExxonMobil, you're trading oil. ExxonMobil has 5, 3, and a bullet sequence. So Exxon is going to support oil. And when oil rally, gold will rally, right? So the way I look at it is that overall, I can see the support in commodity. You have to give me Greg the symbol right there, and I'll overlay it in the main idea. We don't cover uranium and Elliott Wave forecast, but I will explain it to you. So technically, when you look over here, it's very clear that the grand super cycle in the metals is very bullish. It's very bullish. And zooming in a little bit, I can say that if you're gonna look at gold and you're gonna look at the shortest degree cycle, what do you have? You got, for example, that from the blue box area, you can count here 1, 2, already 3, 4, and 5. You can count that 1, 2, 3, 4, and 5. But we label in a nest. We got the reasons why the nest. And we label in a flat from here because everything relates. If I added the dollar never took the highs right here. These highs in gold, they were never taken by the dollar. So we believe right there that there is a flat involved in gold, and that soon it would end that correction. Regardless, it's a very nice reaction out of the blue box that it should create at least one more high. And all depends on how, believe it or not, you guys gonna call me crazy, but all depends on how the Mexico peso reached that blue box right there. Amazing, but that's how we look at the market in Elliott Wave forecast. The peso should be weak, and the peso, when the peso reach that area, we believe that the metal is gonna end the cycle from here, from around September or last year. And the peso, the rallying from the peso has been weak and doing what we call an ABC from 2020, and the peso lower if we overlay the gold to silver ratio. And I hope you guys understand all the correlation that we play in the market to determine the most logical path. This is the gold to silver ratio on the top and the dollar in the bottom. And now I'm gonna add the Mexico peso. And you're gonna see the beautiful correlation that we have right there between the peso and the gold to silver ratio. Look, it's beautiful, right? Isn't it? It's beautiful. So the Mexico peso is calling more downside here, which is gonna make the gold to silver ratio to either retest these lows and rally before lower or straight lower. By nature, what we got out of the correlation is that the Mexico peso from 2020 needs more downside, which made the gold to silver ratio in the shortest cycle here, which the gold to silver was selling here, right, to at least retest the lows or do 3 ways from here. And because I don't know yet at this stage the speed of the selling of the Mexico peso, the gold to silver ratio will do either a nest or will do 3 ways from here and then react to allow the dollar to make the wave 5. And then it's when the acceleration is going to happen. So it's possible. Yes, we labor in the nest because why not? And because we believe that the dollar still needs and led lower in the C wave. That's what we label in the nest. But I want to be clear that doesn't have to be the nest. This can be 3 or 4 right here, and silver just make another high, and then wave 5 complete with another high. Who's gonna dictate that? The Mexico peso going into this equal legs. So overall, I want to mention to you guys, and I hope, and I want to ask a question to you guys. Please don't hesitate. Now is the time to ask questions. Everyone understand why we in Elliott Wave forecast we bullish the commodities, the metals. Everyone understand why in Elliott Wave forecast we believe that sometimes before the year end we're gonna end the cycle that started in September of 2022. That cycle, which is the reaction from the blue box in all the commodities, should be ending sometimes by the end of the year. In other words, this cycle should be ending, right? Right? This cycle should be ending. And that cycle ending, it should happen when the Mexico peso reach that equilibrium. I got a question for Lee. Are you saying that the US dollar will increase another roughly 16% from current level? I haven't said that. I've been saying the contrarian. I've been saying that the dollar is about to turn weak. That's what I've been saying. And that there will be a moment by the end of the year or early 2024 that the peso reach this area, right? That the peso reach this area. When the peso reach this area, the US dollar will finish the proposal wave 4. The minimum amount of swing in the dollar within the rest cycle here, they are in place. 1, 2, 3, 4, and a 5. The tentative view is that this did an irregular here, right? The tentative view is that this ended here and that the wave A is in place. Regardless, this is the peak in the peso and the dollar break the high. So what I'm saying to you guys is, this is a lot of correlation. You won't see this level or market analysis through critical thinking and correlation, and nobody else in no any service or analyst in the world, right? And what I'm saying is that because we are proud to create this system of correlations, and if you look at it, what I'm saying is that the peso at equal leg from here will end the wave 4, and that the bounce is going to create a retest of the highs or new highs. So that bounce in the peso and the reaction in the dollar soon at the end of the year, guess something is going to create later a putback in the US dollar. In other words, this putback in silver can come from here and retest the lows, or can come a little bit higher. I don't know, because I don't know how fast the peso will reach. What I know is that in the daily chart, the right side is bullish. In the weekly is bullish, right? Is bullish. I got a question that the dollar is overlapping here. Yes, it doesn't matter. That doesn't bother me. Why? Because like I say earlier, in an impulse, when it is a leading diagonal, you can have overlap between the 4 and the 1, Carol, right? And that answers your question also, Lucas, right? So eventually, that's how we see that's how we see in the market. But wave 4 doesn't touch the trend line of a leading diagonal. Yeah, it touched the trend line. Right? in the dollar count, it hasn't touched it. But I'm not saying that the dollar weakness is completed. The trend line goes over here. That's this can be completed. Don't get me wrong, Carol. The dollar can be completed because the gold to silver ratio is completed. And I can make a count in which the wave forward goes here and the dollar is here. Like Greg is saying, the zloty, which is the currency in Poland, which is PLNA right here, within the same cycle, already is very similar to the gold to silver ratio. And the zloty right here, it reached the string area here. So the dollar is in a very, the dollar can be completed within 2008 cycle, but we don't have the data yet. We suspect it can be, but either way, completed or not completed, gold won't go to take 3,000 from here. Gold will be supported and it will get choppy. The same with copper, the same with a silver. And they will do either something like this and higher, or they will extend a little bit higher, finish, and then correct. When that correction coming, you have to look at the peso. When the peso reach that it collects, the dollar will react either to new highs or to retest the highs. You understand? Carol, Lucas, you guys understand the idea, right? Because it should be one or the other. And what I'm saying is, don't sell gold. Doesn't matter that it dropped $150. Doesn't matter that it dropped. Like I said at the beginning, any pullback is an opportunity to buy. How do I make my case? I see 5 ways in the dollar. I see the zloty there and it collects. I see the gold to silver ratio that 2020 is an equal X, right? And it ended that cycle and it's putting 1, 2, 1, 2, 3, 4, 5, clear 5 ways from 2020 and 3 backs. And if I overlay the ratio to the US dollar, it's clear as a Turks Caicos water that I always say that, right? It's clear they trade the same direction. So if these 5 ways are clear, the dollar, which is in the bottom there, is soon to turn bearish. Bullish. Gold and silver bias is bullish. And the dollar, it can do this, react, and lower. Now, if the dollar from here trade to new highs, then the gold to silver ratio go here, and then the dollar peak. It's magic, Hector. It's magic. It's magic. You're the guy from New York, right? I kind of remember you, I think. So the way I look at it is very well designed, very well put. The idea that the commodities are bullish, that the commodities are bullish. When the dollar sell off, the gold is more bullish than the indices. When the dollar sell off, the indices get sideways to higher, based in the market dynamics. So for me, the path is clear. You should not be selling commodities. You should do understand that the peso in that equal X is gonna create a bounce soon in the dollar, but we haven't reached there. In the 4 hour, we like buying the commodities in the daily and the weekly, and understand that sometimes at the end of the year we're gonna see a temporary peak, which, like it was in 2022, was an opportunity to buy. It's no casualty that if I overlay gold to the dollar sell when gold reached the equal X. That's no casualty. But nobody in this planet knows that other than Elliott Wave forecast. Why the dollar peaked in September 2022? Because gold was at equal X. That's the simple answer. Because silver was an equal X. like Herto say, is magic. No, it's not magic. It's market manipulation by the market makers, but these computers that trade the market. Everyone understand, right? I hope you guys open your mind and understand how deep do we go into the market. I'm gonna go over now to some gold and silver ETF. For example, this is a gold ETF. This is BAR. This is a gold trust. Look, this is very nice. 1, 2, 3, 4, 5, and 3 ways back. The same scenario, very bullish, either in a nest or another high and higher. But the reaction from the blue box area is fantastic. It's something very clear for us. And like I say, our members knew that, right? Our members, they were buying gold back in 2022, right there. When was the ETF? It was here. That's one. This is the gold, Barry Gold ETF. Clearly, more clear. This is the one for those like me that use critical thinking to trade. I not trade based in news of what people say. I trade based in critical thinking. Do you really think that this ETF is going to break these lows? It won't break the lows. This is $4.577. So this has only one way, higher. And this is related to gold. This market, when it comes to the commodities, is plain simple, great, plain simple, clear when it comes to commodities. And you know, you've been a member of Elliott Wave for God. You remember me saying in 2014, buy gold, buy silver, buy gold, buy silver. Remember, Greg? So you were around at that moment. So it's the same. It's the same. That's what Greg said. It's the same. And how your family, by the way? It's the same, and it's gonna trade higher, right? That's gold, Barry Gold ETF. Then we have another ETF, which the same setup, bullish, and yeah, it would do either in a very extension higher here. The thing is that from 2022, gold can be ending the cycle with the new high or can be nesting. Who's gonna determine which one is what? Is the Mexico peso. But they are bullish. This is another ETF, Royal Gold. 1, 2, 3, 4, 5, 3 ways back. And already have retested the high 3 times. So it's either the same scenario. I hope you guys understand. These are all bullish. They are bullish. This is another ETF. It's a nest in the grand super cycle. This is a silver ETF. Do you really think, guys, this is a silver ETF? Do you really think that this ETF is going to break those? If I ask you guys, there's hundreds and hundreds of people here. If I ask you guys, what percent do you guys see that this is going to trade below 14 or that is going to hold the lows? I wanna ask you, which part do you think has more probability? Breaking wave 2 and red low or starting breaking higher? Which one do you think has more probability? Bullish or bearish? Using critical thinking. Everyone agree with me that it's breaking higher, right? Everyone agree. No a single question there that is lower. So if this ETF is gonna break higher, what do you think silver here it will do? They are identicals, right? They are identicals. If this ETF is gonna break higher, that everything is gonna be shared. I don't know if we're gonna share the PDF. The PDF is almost nothing, but we're gonna share the videos. So if I put the dollar here, if I put the dollar here again, and I analyze the dollar, what do you see? The dollar, look at the decline here, how I agree with the reaction higher in the dollar. So dollar had 5 waves, and this won't go lower. Who needs to go lower? The dollar, right? The dollar needs to go lower. I hope you guys understand that, because the silver is trading is silvers against the dollar. This is another silver ETF, 10 case. It can play games. Yeah, it can stand in the nest like this. That's the most bullish view in the 4-hour, the nest. Or it can do just one more high, retest lower and higher. Very simple. But it's going to be supported. So, and this is, for example, gold against the pound dollar. And you see there in gold against the pound dollar, a bullish gold, right? A bullish gold. And at the end of the day, what I want you guys to understand is that for us to draw the conclusion that the commodities are bullish, we don't just look at the commodities. We look at the dollar, because you're trading against the dollar. We look at instruments that affect the dollar. We look at the indices. We look at the yen pairs. We look at the gold to silver ratio. We look at things. We look at the cycles. At the end of the day, labels do not matter much. At the end of the day, Elliott Wave really doesn't matter that much. We in Elliott Wave forecast, we got a forecasting system in which is based in 20-30% Elliott Wave correlation, another 20-30%. Our own system that we create with the pivots and the distribution system. That's we own those systems. Correlations. We don't use too many indicators. We only use the RSI and the stochastic RSI, and we in the cycles and the sequence cycles, correlation, distribution, Elliott Wave, and a few indicators. And we put together a system. Also, the market dynamics plays a role. How the indices will react when the dollar sells. It's no casualty, because at the end of the day, in the market, there are 3 elements. There is the indices, the dollar, and the yen. And the 3 cannot be rallying or selling at the same time. One of the 3 always needs to be technically sideways. And if you look at the market overall over the last 6 months, what is the dynamic over the last 6 months? You get back here, and you're going to see that the dollar over the last 6 months, how it's been relative sideways here. In this period of time, the dollar has been sideways. I won't cover the indices buyer. This is not about that. You want to see the indices buyer? We offer a trial. You can go there. So the indices, there are thousands of members that pay for the service. And I don't want to be rude. It's disrespectful to them to tell us what we think about the indices in a free seminar. So what happened with the indices? You're going to see the dollar sideways. Then you're going to see how an instrument like, for example, NASDAQ has been rallying, right? Let me see how the S&P in that sideways dollar, for example, the S&P has been rallying. Less sideways than the dollar. We put the dollar, and this is Nikkei from Japan. Look at the rally in the Nikkei. The dollar bottom over here. Saying here the dollar is sideways. But if you see the Nikkei right there, what the Nikkei has done. The Nikkei, the dollar is sideways. The dollar is sideways. The Nikkei has rallied. And consequently, the yen pairs, they have been also supported. Why? Because the market is trading between in an index dynamic. Technically there, in an index dynamic. So you see that this one is trending, this one is trending, this one is sideways. When that dynamic switch, one of the three here are gonna get sideways. It won't be the dollar yet. I believe that still the dollar is gonna stand. So the dollar reaction, most likely this way, is gonna affect gold, silver, and copper. And that's what we say, that the commodities, they should stand, this is copper, they should stand still a little more outside within this cycle, right? It should stand a little more outside when the dollar sells. But I believe it's gonna be trapped before rally. And the same with silver, either peak with the new high or make the next, either go. So we got the base to believe that you should not be selling the indices, that the gold, that the dollar 5 ways are supporting that. You need to understand that soon, within the next few months, it's gonna be a selling in gold and silver, but it's another opportunity to buy. Why? Because the peso is going to find support, and because the index is gonna end the cycle from last year. And then at that moment, the GDS is gonna sell, and then on and on and on. But then you need to play a swing ahead. What is the swing ahead? The 5 swing lowers in the gold to silver ratio, which is telling you that any bounce in the dollar is going to fail. I don't know that the dollar, because the 5 ways from here is telling me that the dollar either makes a marginal new high or the dollar peak and fail when this one, if the dollar goes for the new high, this one will do a double from here. It's a process, guys. It is a process. It is a process. That's why in Elliott Wave forecast, we do 4 hours a day per day. We update the 4 hours every day. We update the charts every weekend in 1 hour, 4 hour days and weekly. Why? Because the market talk, and when the market play his music, the analyst needs to analyze. I don't know right now, in an honest way, if the commodities are nesting, or if the commodities, I'm gonna do a wave 5. Caro, I don't know, to be honest with you. And you wanna know the honest truth? I don't care neither. You know why? Because what I have to know and understand is the following. This is a question that I have. What I have to know is the following, which is critical thinking. As far over here, at the Mexico peso trade over here, how do you see, Carol, the dollar trading there? Higher or lower? Or sideways to lower, right? Should be trading lower. As far as this one doesn't reach or deny that area. So if this one goes over here, I know that the dollar most likely open another extension lower. And I need to know when I reach here, where I am with gold. Either if I'm here, all it takes me is to switch 1, 2, 3, 4, 5. If I don't see the expected acceleration in the dollar, guess what? Then I have to switch it. The market will talk. The market will let me know which one of the two sides is. The most probable path is another high at least. Why? Because of the ratio. Why? Because of the ratio. And the ratio, if you zooming in into shorter cycles right here, if you zooming in right here into shorter cycles, right here, let me remove this fast. The ratio seems like it reacted from this blue box, it reacted from this blue box, it reacted from that blue box, it reacted from this blue box. And the ratio, at least it should test 69.88 because this seems like an impulse here. You follow me? And it reacted for the technical 618 here. So the ratio here is going to push the dollar lower because everything relates, everything makes sense. So I don't know if it's gonna be the case and it's straight lower like that. Now, if I'm gonna call right here that the ratio is gonna do this, and assuming that I have to place the net. You understand? Everything that we do, there is a thinking behind. We don't do nothing that is automatic. Everything is automatically thinking and automatically put in line here. And we put it in the forecast. That we change it? Yes. Then nothing is perfect. We are not perfect. But at least we don't trade based on indicators only. We don't trade based on news. We don't do that. At least we trade based, we have a very strong critical thinking behind the forecast. And this is the case why we believe that you don't sell the metals, that you buy the dips. Now that they are stopped within the trend, of course, we believe that before the year we might see another stop in the bullish trend of the commodities, and the pullback would be another opportunity to buy. And that's why the last topic here is the future path. Is what I just said. Bullish the commodities with a stop when the Mexico peso reach right here, this blue box. Already the Singapore dollar, which we cover also in EWF, SGD, already reached, is at the equalex, right? Or is within the blue box. It's there, I mean, it's right here at the blue box. And that's what have created the bounce in the dollar in January is because the Singapore dollar already reached that blue box right there. So the dollar will bounce soon. And when the dollar bounces, the commodities will sell. But then you have to go to the highest degree, Hector, as you know, that then you look at it and say, all right, then the 5 weeks in the dollar, the gold to silver ratio, the zerotic from Poland, is telling me any pullback in the commodities is a buy. And that's how we see the market. So gold, silver, copper, they should be supported in the overall picture over here, right? They should be supported until you see this ratio over here. And what we're saying is that it's gonna pull back from here or from here. But a buy. That's the way I see it. So that's the seminar, guys. I want to share with you guys two things. These are all the instruments that we cover, right? These are all the instruments that we cover in Forex and indices and commodities. Look at all the commodities in stocks, ETFs, and cryptocurrencies. We cover 78 instruments. And I want to invite you guys all to take over here. I want to invite you guys all to visit the homepage and take the 14-day trials. If you like our analysis, take the trial. You're gonna be if you participate in our live sessions. We do live sessions every day from 6 in the morning all the way to 1 p.m., right? If you participate in the live sessions, you're going to have a very good understanding what is the right side, what you should do, what you should not do. And that's enough to be a successful trader when 96% of the trader ending losing in this profession. So that's the seminar. Any overall question that you got about the seminar, I'm more willing to answer. So any question about the seminar that you want to know. I hope the case is being made about what we like. I don't have if you want to share the PDF, I recommend it to you to visit the homepage, click over here and send a request, and they can send it to you. But the PDF, there is no notes in the PDF. The PDF is very simple, right? This is the PDF, my bad. This is the PDF. The PDF is very simple, right? There is no much right there on the PDF. It's very simple. That's your PDF. There is no notes. That's the PDF. You better watch the recording and you take your own notes, Ronald. Right? Yeah, miners are gonna trade higher when gold to silver trade higher. Yes. And what is the current forecast? I just share it with you guys. We're calling a nest in gold. That's the forecast. We're calling a nest in both of them. But the 1, 2, 1, 2, like I say, this can be one in blue. This at least one more high the market should do. I tend to say that GDS, which is the miners, Neil, is identical to gold. Kind of. It's the same trade. I don't think that nobody's lead. I think that it's the same trade, my friend. If you look here. Thank you, Herto. I don't use double bottom, double top. I don't use that, to be honest with you, Ronald. For me, I mean, I don't pay attention to those things. I like GDS right here. I like GDS right there. And for silver, I mean, this one right here, I like LSB right here. It's the same. I mean, in the long run, AG, the question is which one, in the long run, the question is which one is going to be stronger, gold or silver? I would say in the long gold. I mean, I don't need to tell you. I don't need to show you the gold to silver ratio. This is the silver ETF. And this is the gold miners or GDS. If you notice right there, the gold miners is stronger than the silver ETF. Why? Because you see, like I already took the lows here, this one took the lows, this one hold it. So I spreading the silver to around the gold ETF because, like I say, the gold to silver ratio in the long run, the gold to silver ratio, it will trade lower. When the gold to silver ratio trade lower, silver around the gold ETF. Now, still the gold to silver ratio can surprise us and do this. So depending on the peso. And in this period, gold is going to hold more than silver. But if this high hold, silver is stronger than gold. What is the current market dynamic? Dollar indices or yen? I believe it's indices. I see. I don't use harmonic patterns. I don't use those. And I use little Elliott Wave in a way that I use Elliott Wave runner to explain to you guys how we look at the market, because it's a language that everyone understands, right? So for me, I use the system that we're creating, that is based in Elliott Wave, 20-25% Elliott Wave, 20-25% distribution, cycles and sequences, 25% correlation, and 25% and 25% they are also and 25% also they are that we use like I say, the distribution and the cycles and the sequences. That's how we see it. Elliott Wave counting or blue boxes? Blue boxes all days. Blue boxes all day. Right? Blue boxes all day. It's much better tool than Elliott Wave, because the thing with the blue boxes is that in the blue boxes, what do you have? In the blue boxes, when you reach the blue boxes, both sides of the market agree on a reaction. For example, this is a simple example. You got 5 followed by 3. You see that Benaha, right? You got 5 followed by 3 there, right? In an Elliott Wave structure, if you look, the Elliott Wave, you can have, for example, 5 waves followed by 3. But 3 can also become 7, which is 3 can become 7. So what matters the most is one thing, is the understanding right there, the understanding that this area is a buying area. So Elliott Wave, in this case, you got 5 followed by 3. You got the reaction. You got what you want. So now it's going to be another selling, or now it's going to do 7. And then if I zoom in to the previous or more to the reaction from September, right here, you got 3 reacted, you got 3. You understand? So, like we always say, what is the good thing about the blue box? That both sides of the market, the buyers and the sellers, agree to trade that area. Let's say in the gold to silver ratio, let's say that the gold to silver ratio go to 69 and higher. The sellers that they were selling here, the sellers that they were selling here, I want you guys to understand this is the daily view in the gold to silver ratio, and this is the weekly view. So this reaction here is this reaction here, right? And this bounce here, so you guys understand, is this bounce. It reacted from the blue box there. The sellers entered there because of the blue box, and the buyers took profit there because of the blue box. The buyers enter here, pushing here, because it's a no enemy area. You've been a member for sure, because that's the language that we use. There are no enemies area. Both sides of the market agree in the blue boxes. That's why every trading proposition that we send in Elliott Wave forecast, they are based on the blue boxes. We don't trade in between. Yes, you should go. The question is, should I follow the highest degree cycle to trade the commodity? Yes. You should know what happens in the highest degree before trading the shortest cycles. So we very deep into the market, and we are not perfect. Our charts don't always work the way that we want. We are not perfect. We are human after all. But when we run, we are wrong thinking. We are not wrong guessing in the. For example, today was the non-farm payroll. I care less about the non-farm payroll. I care less about what the Fed say. I don't pay attention to those events. Honestly, I trade my system, the system that we develop in Elliott Wave forecast, and I trade the blue boxes, because when I'm wrong, 85% of the times I get the expected bounce. Because if I saw the here looking for new lows, I already got my reaction. Now let the market decide. That's the way we look at it, the market, guys. A very up to 2023 market. Keep in mind, Elliott Wave was developed in 1933 or 1930s. It's almost a century ago. I cannot forecast based in a century ago theory. And that's what we have done in Elliott Wave forecast. Any other question? I got chance for 2 more questions, guys. I hope you guys enjoyed the seminar and that you guys take the trial. Thank you, AJ. Yeah, we were indeed. And we'll be, I mean, everyone was speaking, if you remember, AJ. Everyone was speaking. All right, guys. So thank you, guys. Have a nice weekend. And doesn't take only $9.99. Take the trial. It's going to help you guys a lot to understand the market. And don't be lost, guys, in a jungle, put it that way, in a battle when 97%, when the big fish take the small fish money. And don't get trapped in the trap. That's the bottom line. Right? So have a nice weekend all. See you guys around. You can follow us in social media, Twitter, StoreTwix. Yeah, that is pretty good. You can follow us on YouTube also. Right here on Elliott Wave forecast. You get some free videos there. You won't get worse as a trader. You will get better if you listen. Thank you, guys. So have a good weekend, guys.